Hello, my name is Bruno Bianchi Sarcone. I run Spainguru.es, and this is the Spanish Taxes webinar. Today is November 11th, 2025. I am walking on a treadmill. My doctor told me you need to walk more. And we're going to go through a presentation and then a Q&A session at the end. A little bit about Spainguru. Our objective is facilitating the relocation process for English-speaking foreigners to Spain since 2014. And we have great reviews on Trustpilot and also on Google. So you are in very good hands. You can use Spainguru.es for free. You can join my weekly newsletter that I send every Monday. More than 15,000 readers, and it is free. You can opt out anytime. And I feature the top discussions on Spainguru's social media, the most watched video on YouTube channel, and also investigation articles and so much more. So, as I mentioned, there is a YouTube channel with more than 1,000 videos, more than 7,400 subscribers. You can also subscribe today. There's a blog post with nearly 2,000 articles and a huge community with a aggregated total members quantity of 150,000 with many dedicated groups like the Spanish Immigration Group, Non-Lucrative Visa, Digital Nomad Visa, and so much more. Spainguru.es, you can use it for free, as I said. We have very interesting sessions like the Move to Spain checklist, all the free webinars. Now I have 7 webinars together with partners, and the weekly newsletter that you can join today here. You can explore destinations in Spain, 13 destinations with updated information about those cities. And if you need expert advice, you can go to services. You can find immigration lawyers. You can find tax advisors, gestores or tax accountants, financial planners as well, health insurance for Spanish visas, and medical certificates, sworn translators, postal services in the US and the UK, so much more. If you want to get your TA card, there's also gestores services here. And yeah, many resources if you're moving to Spain, like shipping, parcel shipping, international moving quotes, pet transportation, many people moving with their pets. So definitely worth taking a look. Online classes for adults, for learning Spanish, tutors, so much more. Definitely, of course, I get a kickback every time that someone hires a service from my recommended partners, but I have personally vetted all of them. Most of them I have recommended for several years. So definitely worth having a look. This presentation is for general information only and it's not legal, financial, or tax advice. For personal guidance, consult a qualified advisor. You can find experts on Spainguru.es, as I just mentioned, and Spainguru is not liable for errors or outcomes from using this information. What are today's webinar's objectives? First, that you gain an overview of Spanish taxes so that you understand the key tax categories in Spain, learn the basic principles of taxation in Spain. Hopefully, you will prepare yourself to have more informed conversations with tax advisors so that you engage more effectively with them and you ask more precise and informed questions, and also clarifying the role of a professional tax advice that, of course, in this webinar, we're only going to provide general information, and it will never replace a personalized advice from a tax advisor because individual circumstances can have a significant impact in your tax liabilities. And identifying key considerations for expats, like tax implications with a focus in US and UK nationals, but 95% of the content of this webinar applies for anyone moving to Spain, and so that you are aware of compliance requirements and deadlines to avoid potential penalties. So all that you will get, hopefully, from today's webinar. Now, let's talk about Spanish tax residency. You become a tax resident in Spain and must pay tax on global income if any of the following conditions apply. The most important, if you spend over 183 days in Spain within a calendar year, that starts on January 1st and goes until December 31st. The days in Spain don't need to be consecutive, and it doesn't matter the immigration status. So, for example, if you come to Spain as a tourist, those days also count, right? And then later on the year, you move holding a visa, you will have to add all those days, okay? So if you are over 183 days, you will become a Spanish tax resident. Second condition, if your main source of income comes from Spain. For example, you're owner of properties in Spain and you get rentals. And the third one, very important, if your family lives in Spain. Yesterday on Spainguru's community, one person was asking, I live in Dubai. What happens if I send my family under a non-lucrative visa to Spain? Will that be possible? Yes, it is possible, but be careful because since your family is living in Spain, potentially the tax authorities will consider you to be a Spanish tax resident. Even if you are not in Spain, the third condition would apply. Okay, so July 2nd is, let's say, the date in which there's only 182 days left in the calendar year in Spain, in the tax year in Spain. Therefore, if you move after that date, you are on the safe side, let's say, from becoming a tax resident. Okay. So yes, remember, once you become a Spanish tax resident, you will be subject to taxation on worldwide income and potentially on the net value of your assets for taxes like wealth tax and solidarity tax. And if you're a non-tax resident, but you have income source in Spain, you will be taxed for that income at specific rates for non-residents. Something very important, that it is also a misconception. The Spanish tax year is different from the Spanish immigration year. The tax year is a calendar year from January 1st to December 31st. But the immigration year is a natural year that starts when you gain, let's say, residency in Spain. So if you move on July 2nd, 2026, your immigration year will go to July 2nd, 2027. That may or not overlap with your tax year. As we said, every January 1st, a new tax year starts, regardless on when you move to Spain. And here's another way to see it. You can see the Spanish tax years in red and the immigration year in blue for someone who moves on July 2nd. As you can see, there is only an overlap in half of the year. Therefore, you can play on how much you are in Spain from an immigration perspective without, let's say, triggering the first condition of 183 days. Yes. Of course, this is an illustration of how it can be. And of course, there are many implications of doing something like this. Yes. But this is important because many people says that for the non-lucrative visa or for other temporary visas, you need to be a minimum stay of 183 days in Spain. Therefore, you become a Spanish tax resident, which is not an entirely true statement because the years of tax year and immigration years may or not overlap. We mentioned that non-residents will pay taxes on Spanish income, and depending on which passport you hold, you will pay different rates. If you're a non-EU passport holder, normally you will pay 24% tax on your Spanish income. If you're an EU passport holder, you pay less, 19%. Now, let's talk about tax systems or regimes and obligations in Spain. There's two regimes, the general tax regime and the special tax regime, also known as Beckham law. The general tax regime includes personal income tax, or IRPF, wealth tax, which is a regional tax on your assets value, the solidarity tax, which is a national wealth tax, and an informative form. Therefore, it's not a tax, but it's a form where you inform of the existence of assets abroad. Under the special tax regime, this changes. It's also called the Beckham law, and many people are not eligible, we have to say. It is mostly for people who come to work in Spain. Therefore, if you're not going to be working, for sure, you're not eligible. And if you're coming to work as a contractor in Spain, as an autónomo, almost sure you're not eligible. This is especially for employees coming to work in Spain with other conditions. Now, the advantages of this special tax regime is that you will pay a flat 24% on your income from employment. You don't pay taxes on your income coming from outside of Spain, okay, except for employment. That's the exception. You don't have to pay wealth tax. You don't have to submit the 720 form and other perks. Now, tax advisors will tell you that if you're making less than 55,000 euros per year of taxable income, it is better that you pay taxes under the general tax regime because there are additional administrative burdens that may outweigh the benefits, and also you won't have family deductions and allowances, etc. Therefore, if you're under this threshold, it may be better to go under the general tax regime. Now, let's talk about the first tax obligation, the 720 form. This is, as we said, not a tax. This is a form that you fill where you give information to the tax authorities in Spain about the existence of assets and rights held abroad outside of Spain, grouped by category. And if any of those categories, the threshold of value of that category goes over 50,000 euros, you need to declare everything in that category. Example, you have 2 bank accounts outside of Spain with 25,000 euros in each. Total is 50,000 euros in the bank category. You will have to declare the existence of those 2 bank accounts. Once you become a Spanish tax resident, you have to file your first 720 form. Why authorities want to have this form? Because they want to know if potentially you have any taxable income and potentially whether you are over the threshold for paying wealth tax and solidarity tax. Now, not every year you will have to submit this form. You will only have to, let's say, update this form or submit again this form if the report changes are over 20,000 euros per category or if there are any asset closures. The deadline for this report is March 31st, and if you're working with a tax advisor or tax accountant, you start preparing it 3 months before. The second tax obligation is the income tax, okay, which everybody has to pay on an annual basis, okay, by June 30th. For example, in June 30th, 2026, I am going to pay my income tax for the full tax year of 2025, okay? Normally, this tax is taxed at progressive tax rates that range from 19% to 47%. And you have different types of income within this taxation, okay? And because you have a more favorable taxation for other types of income like investment. So under ordinary income, you have salaries, rental income, and business earnings. For investment income, you have dividends, interest, capital gains tax, and the tax rates are more favorable. They range from 19% but end at 30%. We mentioned the filing deadline is June 30th, okay, here in Spain, and you start also 3 months before to prepare it. Now, if you're an autonomo like me, this is a contractor, not only you need to file the yearly income tax, but also quarterly filings, okay? This is especially interesting for people who come to work to Spain under the digital nomad visa or normal work permits, highly qualified or highly skilled worker. So if you're an autonomo, you have to advance a 15% or 20% income tax every quarter. And then when you file the annual payment of the income tax, you would then pay the difference, whatever it's left. It's always going to be paying. You're never going to get anything back unless you lost your job or your income, of course. Now, US citizens, you know that if you're an American passport holder, you still need to file taxes in the US, regardless where you are considered a tax resident in the world. And April 15th is normal deadline. Now, if you live abroad, you will have an automatic extension of your filings in the US that go to June 15th. And you can also request another extension that goes until October 15th, if I'm not wrong, by paying some interest every time that you have an extension. So many people will file their taxes in Spain, yes, and thanks to the double taxation agreement between the US and Spain, you will not pay taxes on the same thing. Therefore, whatever you have paid to Spanish authorities, you will be able to credit it towards your taxes in the US. Therefore, you will just file taxes in the US, but actually you won't need to pay anything because you would have already paid taxes to Spanish authorities. All right, I'm trying to change slide. There it is. Now, how do tax brackets work? This is a common asked question. If I make 100K of 100K of taxable income, would I have to pay 45% income tax? Why people ask this? Because you can see how progressive tax brackets are written. You can see on the table on the right there's 6 tax brackets. And if you see number 5, between 60,000 euros and 300,000 euros of taxable income, you will pay 45%. But this is not how it works. Thank God, you will be paying less. In fact, for the first 12,450 euros, you will be paying 19%. For the next 7,500 euros, you pay 24%. For the following 15,000 euros that you make, you will pay 30%. Therefore, you will be paying a sort of median or average tax on that income. Therefore, for 100K, you will be paying an effective tax rate of 36%, which is not low, but it is not 45%. So many people are scared about this, but definitely you need to understand how the progressive tax brackets work, because many taxes in the Spanish tax system work with progressive tax brackets. And here's the calculation. If you make 30,000 euros, you will be paying 24%. And you can see how it goes up if you make 100K to 36%. These are ballpark figures for illustrative purposes only. And of course, we're not taking into account allowances or deductions or expenses or anything. This is just so you understand how it progresses the tax rate depending on your income. Now, let's talk about third tax obligation, wealth and solidarity taxes. Very important. The wealth tax is regional, and the solidarity tax is a wealth tax that is national. The regional wealth tax will depend where you move in Spain for the threshold in which this tax kicks in. This tax is calculated on the net value of your assets by December 31st of the previous year, okay? Now, if you move to regions like Madrid, Andalusia, Extremadura, Cantabria, effectively, there is no regional wealth tax because either the threshold is 3 million euros or because there is a 100% rebate on this tax. So sometimes you need to file, but you will not file, let's say, saying that, yes, I am over the threshold, but you will pay 0%, okay? Now, for the national wealth tax, called Impuesto de Solidaridad, this one kicks in at 3 million euros without allowances or deductions, okay? All these taxes, they have allowances and deductions. So if your net worth is over 3 million euros, you need to study whether you are liable for this tax. And it is a national tax, therefore it doesn't matter where you move to, you will not escape it. But thank God, the threshold is much higher than the regional wealth tax. The regional wealth tax, for example, in regions like Catalonia, the threshold is only 500,000 euros, okay, without allowances and deductions. And Valencia recently moved the threshold from 500,000 euros to 1 million euros, right? So this is changing all the time. And actually, if, you know, every time that I have this webinar, I want to update the slides and everything, and I try to find information about the different regions, the most common regions. It is very, very hard to find updated information because really this is changing quite often, and it's hard to keep up. So it's important that you talk to a tax advisor to understand the specific region where you're moving to, okay? Now, there's something called the 60% rule. It is hard to understand, and it's harder to explain, but at least I want to bring it to your attention. And especially this is for people who have a high net worth, but low income, yes? So the way it works is that you can reduce your wealth tax up to 80%, okay? Because the wealth tax is actually capped at 60% of the income, but at least 20% of the wealth tax must still be paid, okay? So just remember, there is the 60% rule, and if you are in this situation, high net worth but little income, let's say, this is where the 60% rule is important to know of its existence, and it's important that you remind the tax advisor of this rule because, you know, tax advisors here in Spain are human, and it's never too much to remind people about the different things. The deadline for the regional wealth tax is June 30th, and the preparation starts 3 months before. For the solidarity tax is July 31st, the deadline, because actually what you paid as a regional wealth tax, you can credit it towards the payment of the national solidarity tax. Now, let's talk about a calculation Generic calculation, this is for illustrative purposes only, ballpark figures of someone who is living in Catalonia, who is owner of a property that is worth more than 300,000 euros. So imagine that this person has total assets net value of 1 million euros. You can deduct up to 300,000 euros if you own a property in Spain. Therefore, we apply the threshold of Catalonia, which is quite low at 500,000 euros, to reduce the taxable income. So 500,000 euros are not taxable by the regional tax. And you deduct 300,000 euros because you own a property. Therefore, you only have 200,000 euros that are taxable of wealth tax. You apply the progressive tax brackets, and you will be paying 500 euros that year. If your net worth is 1.5 million euros, 3,000 euros. If your net worth is 2 million, 8,000 euros. Net worth of 2.5 million, 14,000 euros. And over 3 million, remember, the national wealth tax called the solidarity tax kicks in. Therefore, you will need to see how that applies to you and if you can or need to credit any payment that you did for the regional wealth tax. Now, let's talk a little bit about digital nomads and the tax implications. There's basically two ways in which you can move to Spain as a digital nomad: as an employee working for a foreign company or as a contractor working for foreign companies, right? So if you move as an employee, yes, as a W-2 in the US, you will need to prove that you're paying Social Security in your origin countries. Spain is accepting the certificate of coverage from UK, USA, and I lately heard also Canada. That means that you're paying Social Security in those home countries, and due to the Social Security agreements with Spain and those countries, Spain will not claim from you Social Security payments and will give you access to public healthcare system and to other perks, okay? Now, the interesting thing about moving to Spain as an employee is that, as we mentioned earlier, you could be potentially eligible for the special tax regime of Beckham law, okay? Now, if there is no option to obtain the certificate of coverage, many people decide to switch from W-2 or employee to contractor, right? Now, that means that once they move to Spain and they become autonomous or contractors in Spain, you will have to start paying Social Security, and by paying Social Security, you will gain access to Spain's public healthcare system, pension, if you have children, paternal leaves, paternity leaves, etc., etc., etc. But when you move as a contractor, also you will have to start filing taxes not only annually like everyone else, but also on a quarterly basis. As we mentioned, you will need to advance income tax payments, and also you will also have to pay VAT, which if you're moving as a digital nomad, you won't claim too much VAT from your customers because you don't claim VAT from customers abroad, okay, or even inside the European Union, mostly to customers in Spain. Therefore, but it's important to understand that you need to gather that VAT, and then you need to do the VAT payments quarterly, and also one declaration of VAT per year in January. Let's talk about a case study, okay, of someone who moves in the second half of the year, therefore not becoming a tax resident in Spain, as per the first condition of staying in Spain for more than 183 days in a calendar year. This person arrived in Spain on September 2024, applied for the MB in October, approved for this visa in November, and registered as autonomo in December. This person asked, how do I pay taxes on the income that I generated in 2024, since I wasn't a tax resident in Spain? And an expert answers, this is a particularly gray area as you weren't resident until you got your TA card, which is the residency card, so you weren't even officially allowed to work. But you are supposed to pay tax in the country where you're physically working, so strictly speaking, on any work performed since September. So even if you weren't a Spanish tax resident in Spain, the fact that you were in Spanish soil with your computer on the desk and generating income from Spain, this income is generated from Spain. And this falls under the definition of Spanish non-Spanish tax resident generated income. Therefore, tax advisors would say that all the income that you generated in 2024 needs to be filed as a non-resident. And then once you become a tax resident in 2025, you will pay taxes as a Spanish tax resident. If you want to know more about Spanish Digital Nomad Visa, I go deeper into the tax implications, not only about the tax implication, but also immigration implications of this visa. I go 1.5 hours free webinar that I have every 15 days, and I also send you the recording. So yes, definitely worth having a look to it. Remember, there's a Q&A session at the end of this webinar, and if you have to leave earlier and you want to leave a nice review on Trustpilot, I will really be very grateful. There's a button there on the top green bar that will redirect you to Trustpilot where you can leave a review. Also, if you're watching this webinar on YouTube, you can always ask your questions in the comments below. And if you like this video, please give it a like and subscribe to Spainguru's channel. Now, let's talk about some more additional taxes for everyone in Spain. Inheritance and gift tax. Impuesto de sucesiones y donaciones. It is a regional tax, so depending where the assets are located, different tax rates will apply. For example, Madrid and Andalucía are very favorable regions. Catalonia is not very much. If you inherit assets from those regions, there's going to be different taxes that you will pay. Also in Spain, there is not much freedom on how much you leave in your will to certain people. You know, there's many things that are already established depending on the family connections that you have. So it's very different from the US, for example. So it's important that you also plan your estate correctly once you are in Spain, and also make sure to work with people who understand how your origin country estate planning taxes and wills work, so that you coordinate correctly those two things. Then there is the transfer tax. Once you buy property in Spain, there's two ways. Either you buy a second-hand property or you buy a new built property. If you buy a new built property, you will pay a VAT of 10% of the total value of the property. If you buy second-hand property, it is a regional tax called transfer tax that you pay instead of the national VAT for new build properties. So again, depending on where you buy the property, you will pay one tax or another. Best region to buy property in this sense is Madrid, 6% transfer tax. Andalucía is 7%. There are little variations depending on the price of the property that you purchase. But in general, for example, Catalonia, again, the taxes are higher at around 10%, to give you an example. Now, recently, Mr. Pedro Sánchez, the Prime Minister in Spain, wants to tackle the housing crisis in Spain and went against non-EU passport holders who are non-residents in Spain and who are buying property in Spain, and said that the transfer tax should go up to 100% of the purchase price. But this, even if it has been discussed among ministers, etc., it's not very clear whether it will go forward. But I'm going to keep you updated, okay? It is very low chances that happens. Now, let's talk about the property tax. Once you are owner of a property in Spain, you will have to pay IBI or property tax, and that will depend where your property is located, the amenities of the neighborhood, etc., etc. You know, depending. I live in Málaga, for example, and neighboring towns are Rincón de la Victoria and Torremolinos. And basically, the IBI is double in Torremolinos than in Málaga, and also Rincón de la Victoria. It will depend where you live, if your property has swimming pool, etc., etc. So basically, it is, let's say, a city hall local tax. And then you have capital gains tax. You have also, let's say, some misunderstanding about the capital gains tax and the municipal plusvalía, okay? And I have a slide that compares them. Let me see. Here it is. So if you sell a property outside of Spain and you're a tax resident in Spain, you will have to pay capital gains tax on the proceeds of the property, or what you gained, okay? Now, if you have a property in Spain and you sell it you sell the property from Spain, not only you will have to pay capital gains tax in your annual income tax, but also you will have to pay the plusvalía municipal, which is a local tax that is based on the increase of the land value, and it is a bit different. Okay, there are different ways to calculate it, and but basically it is different tax and only for properties located in Spain. Mention this because many people confuse the capital gains tax with the plusvalía municipal. Coming back to the announcement of Mr. Prime Minister Pedro Sanchez, who said, let's raise the transfer tax to 100% of the property price, did a little investigation, and only 2.7% of the transactions in 2024 were made by this group of people. Therefore, if this group of people sees this taxation go to 100% of the purchase price, it will have no impact in the housing market. Also, because many of these people were actually planning to become Spanish tax residents at some point, and they just maybe have to wait until they do in order to, let's say, not benefit from this increase. Okay, so basically it is a political announcement that, and no one thinks that really will make it through into reality, to put it lightly. Now, we mentioned the capital gains tax. How can I avoid the Spanish capital gains tax? First of all, there's many ways to avoid the capital gains tax in Spain. For example, if you sell your primary property and you invest all the proceeds into a new primary property, if you sell your main residence and you're over 65 years of age, etc., etc. There are many ways to mitigate this tax. But probably the best way to do it is to time your move to Spain if you're still thinking about moving to Spain and you want to sell your house, for example. Now, the easiest way to explain it is if you sell your house on December 31st and you move to Spain on January 1st, then you wouldn't be liable for capital gains tax on that sale because the sale of your house would fall in a different tax year than a year where you potentially will become a Spanish tax resident, because tax years are calendar years. Now, for example, if you sell your home in January, you obtain your visa in March, and you fly to Spain later in the year, make sure to spend less than 183 days that calendar year. Therefore, if you move after July 2nd and you spend every day until January 1st the following year, you will be on the safe side, because you wouldn't be a tax resident the same year in which you are selling your property. Now, coming back here, if, for example, you sell your home in January, you move to Spain in March, and you spend every day until the end of the year, you will become a Spanish tax resident retroactively from January 1st during that same year. Therefore, you will be liable for capital gains tax. And again, this tax is also taxed at progressive tax rates, as we said, from 19% to 30%. Example, you buy a house of 100K and you sell it for 200K, you made a capital gain of 100K. We apply the progressive tax breaks. You will be paying about 22% of capital gains tax. Another question or discussion issue is, if you plan to retire in Spain, is your pension taxable? The answer is generally yes. Your pension is taxable once you become a Spanish tax resident. People talk about the thresholds where to declare this pension to Spanish tax authorities. If you have a unique income source, it's 22,000 euros. But if you have multiple income sources, it goes down to 12,000 euros aggregate income, but only 1,500 euros from secondary sources. These are annual values. Now, the trick here is that pensions from abroad appear as second payers, so if they're greater than 1,500 euros a year, a declaration must be made. So really, you can't escape. And then again, this is ordinary income, and progressive tax rates from 19% to 47% will apply. Now, if you have government pensions or public pensions, okay, there is the possibility that those pensions aren't taxed because the double taxation agreements between the UK, US, and many other countries with Spain generally, let's say, let people receiving this type of pensions not to pay taxes in Spain, but in their origin countries. Now, it is very important that you confirm with a Spanish tax advisor whether the pension that you are mentioning that you're receiving is considered by Spain to be a government or public pension, so that you don't have any bad surprises. Excuse me, I will have a little water. Now, there are allowances for pensioners. Starting at age 65 until 74 is 6,700 euros annual allowance, and over 75 is 8,100 euros annual allowance. Excuse me, I'm also I have a flu as well. So yeah, difficult times. Now let's talk about taxation of American 401k and Roth IRA in Spain. Remember, I'm not a tax advisor. Always consult with a tax advisor who understands how this type of funds work, okay? But I will tell you that 401k taxations in Spain, distributions are taxed as general income and traditionally are exempt from Modelo 720, but lately there are people who are saying that you should also disclose it for wealth tax, okay? And in Modelo 720, right? So get the tax advisor to confirm this. For Roth IRA, investment gains are taxed as income at progressive rates, up to 30%. This is investment income. Must be reported in Modelo 720 annually based on the account surrender value of December 31st and subject to wealth tax with rates varying by region. Generally, Spain tax authorities, all these different funds that exist in the US, in the UK, etc., you have to understand that Spanish tax authorities may have different interpretations on how these funds work. For example, people mention trusts in the US. Spanish tax authorities don't see those structures as they work in the US. They may consider them to be like a company if those trusts have any income, okay, or generate any revenue. So this is very important that you check with an experienced tax advisor that you can find on spainguru.es. Circling back to the fact whether these type of accounts have to be declared in the Form 720, potentially counted for the wealth tax filing, there was a consulta vinculante. This is one individual asked to the tax authorities in Spain to clarify their position and interpretation on this, and the Spanish tax authorities said that yes, they need to be declared, etc., etc. So be careful with that. If you want to read more, remember, I have many articles about Spanish taxation, especially focused in UK and US nationals that you can read today. This is, of course, absolutely free. Now, let's talk about the non-lucrative visa. Do I have to become a Spanish tax resident in order to renew my NLV? This is a big question, especially because lately the Reglamento de Extranjería changed and took effect on May 20th, 2025, adding a minimum stay requirements of 183 days in order to be able to renew any temporary visa in Spain, including the non-lucrative visa. Now, let's talk about this. First of all, the Supreme Court said that a minimum stay requirement should not be added in the Reglamento de Extranjería, but it should be added in the law that governs it, okay, which is a higher hierarchy law called Ley Orgánica 4/2000. So this requirement should be included in that law and not in the Reglamento de Extranjería. That's what the legislators did, and the Supreme Court said this is not legal. Therefore, now we are in an ambiguous situation where the Reglamento says that we have to comply with something, but the Supreme Court says this is not the way to do it and should be deleted. And in fact, it was deleted from the previous Reglamento, but the legislators included this minimum stay requirement, again, even against the ruling of the Supreme Court, which is the boss in these matters, right? Another thing to consider is that, as we said, the immigration year and the tax year are different. And when we say that the minimum stay of 183 days in Spain is needed for the renewal of the visa, we're talking about immigration year, not tax year. So it is a natural year, right? So you can play with this, even still being compliant with that ambiguous requirement, right? So because of these two things, my answer would be No, it is not necessary to become a tax resident in order to renew your non-lucrative visa. It is not, okay? Of course, this is only about renewal of the visa or the residency itself. If you are planning to stay in Spain for the longer term, you want to go for the long-term residency and potentially even applying for the Spanish passport, especially if you have shorter time frame like the 2-year fast track if you are a dual passport holder of a Latin American country, Philippines, etc. You need to comply with other minimum stay requirements, okay? So here we're just in this slide talking about the renewal of the visa and becoming a tax resident in terms of renewing the visa, okay? We're not talking about strategies for staying longer term. If you want to get your long-term residency, you need to not be outside of Spain more than 10 months in the previous 5 years before applying for the long-term residency. And if you want to apply for a Spanish passport, especially if you're applying holding a temporary visa, you can't be outside of Spain more than 90 days per each of the previous years. So be careful because all those requirements will overlap, and depending on what your strategy is, what your objectives are, you will need to eventually become a tax resident in Spain. But if you don't want to, there are ways to do it and still be absolutely within the legality, okay? But you need to get a consultation with experts that understand how the calendars work, how the law works, how the Supreme Court works. For that, you can go on Spainguru.es. I have videos and articles about this and interviews about this. And definitely, you should consult at least 40 minutes with an experienced lawyer just to understand what your options are and understand what your objectives in the long term for staying in Spain are, because that will change everything. I mentioned that I have interviews on Spainguru's YouTube channel. It is free to subscribe, free to watch the videos. And of course, if you watch a video and you like it, please give it a like, especially this video that we are watching now in YouTube. Please give it a like and subscribe to the channel. Now, let's try to summarize all this into one single cheat sheet. Let's take off this button here from the top. So let's summarize everything that we saw today. Tax residency in Spain, 3 conditions: 183 days of physical presence in Spain and calendar year. Main source of income in Spain, family living in Spain. Non-tax resident pays taxes on the income source in Spain. Key tax obligations: Modelo 720, overseas assets reporting, personal income tax that you pay annually. If you are an autonomo, you pay it also on a quarterly basis. The progressive tax rates of general income range from 19% to 47%, and investment income from 19% to 30%. Wealth and solidarity tax. Wealth tax is regional tax, and solidarity tax is national wealth tax, but the threshold is much higher at 3 million euros. Madrid, Andalusia, Cantabria, and Extremadura are favorable regions for the wealth tax, and generally also for transfer tax, for inheritance and gift tax, etc., etc. Special tax regime, Beckham law. You will pay a flat rate of 24% of your employment income worldwide, but then any income generated from outside of Spain won't pay tax. You wouldn't have to pay wealth tax. You wouldn't have to submit the 720 form and many other perks. But for eligibility for the special tax regime, usually you need to be an employee that moves to Spain as an employee. Okay, and you need to be working to be eligible. Therefore, if you're moving as a contractor, probably you're not eligible. If you're moving as a non-lucrative visa, probably you're not eligible. For sure, you're not eligible, in fact. Now, let's talk about taxation of pensions. Generally, pensions are taxed in Spain as an ordinary income, but thanks to the double taxation agreements between Spain and UK, US, and many other countries, government and public pensions may not be taxed in Spain. Taxation of US investment accounts, 401ks taxed as general income, progressive tax rates at 47%, Roth IRAs investment gains tax at 30%, and there is the discussion whether this needs to be declared in the Modelo 720, probably yes, and the implications for wealth tax that reporting this could have. Taxes of digital nomads. If you are an employee coming to Spain as an employee, you need to provide a certificate of coverage or A1 form proving that you're paying Social Security in your origin country. And if you're moving as a contractor, You have to become an autonomo in Spain, paying Social Security in Spain, and of course, every tax that you need to pay. Additional taxes, we mentioned. Inheritance and gift tax, this is a regional tax. Property tax, depending where you purchase the second-hand property, you will be paying at different tax rates. Again, Madrid and Andalusia are the lowest in Spain. And if you're buying first-hand or new build property, you will be paying a nationwide VAT of 10%. Capital gains tax, remember, progressive tax rates from 19 to 30%. You can avoid it by timing your move to Spain or by any of the conditions in order to avoid it, like selling your main residency and buying a new one using 100% of the proceeds if you're older than 65, and many other different ways to avoid it. Transfer tax. Actually, before, when I was talking about property tax, I was thinking about the transfer tax. So the property tax is, once you own a property in Spain, you have to pay property tax, and the transfer tax is the tax that you pay when you buy second-hand property in Spain. That is regional. Deadlines to remember: 720 form, March 31st. Personal income tax, June 30th. Regional wealth tax, June 30th. National solidarity tax, July 31st. And as an autonomo, quarterly payments, January, April, July, and October, and annual declaration as well for VAT. Remember that you can use Spainguru.es for absolutely free, and you can find my recommended tax advisors and financial planners on the top menu, and of course, immigration experts. So if you're thinking about moving to Spain, minimum, in my opinion, you should engage with these two types of professionals: tax advisors and immigration lawyers. Have a consultation with each one of them. They don't have to be my recommended ones. I'm just telling you as an expat. I'm not from Spain. I'm originally from Argentina. And I'm telling you, even being a Spanish native speaker, this is very complex, okay? And unless you're a professional of these fields and you want to take this problem with your own hands, go for it. But definitely go with experts that can help you. Now, many people also ask me, what's the difference between tax advisors, financial planners, and gestores or tax accountants? Tax advisors will basically simulate your tax liabilities when you move to Spain, okay? And will give you recommendations on how to structure all this information, yes? And then if you want to do recurrent filings, these tax advisors will be too expensive. Therefore, you will be related to a tax accountant or gestor, okay, that can do the filings recurrently, but not going to give you much advice on your specific situation. Financial planner will look at how your investments are, where you have the money, in which bank accounts, in which type of funds, and see the possibilities of restructuring and the implications of bringing all that to Spain once you become a Spanish tax resident, etc., etc. Okay, so it's a more strategic and also practical way to see things. So all those, you can find them on Spainguru.es. Of course, you can join my other free webinars: no locative visa, digital nomad visa, move to Spain. Yesterday, I had a Q&A session about moving to Spain with Ainhoa Manero Externa Abogados. Many people showed up. We have like 100 questions. I just uploaded a recording to Spainguru.es YouTube channel. So yeah, definitely it's worth, in my opinion, that you join these free webinars and Q&A sessions. You can always send me an email to hello@spainguru.es, join my Facebook group, watch the YouTube channel, join my newsletter, and remember that the content of this webinar is for information purposes only, and it's not legal or financial advice. Now we're going to go to a Q&A session. And if you have to leave for any reason, please leave a review on Trustpilot. There's a button on the top. And if you're watching this video on YouTube, please give it a like and subscribe to the channel. So I see only one question there, and apparently I already answered it. Let me see. Let's display it. Thank you so much for joining today. In the US, generally, we won't have to pay capital gains tax if we sell and buy. Is that the same in Spain? Can we sell our home in the US and buy in Spain and not pay capital gains? Yes, I went through all this. But yeah, it's wonderful that you have this tax in many areas in the States. Therefore, it would be a pity that you don't plan your sale correctly, you don't time it correctly, or that you don't understand the conditions that you have to mitigate this tax once you move to Spain. I understand that selling a property is a process that takes many months, several months, unless you want to sell it badly. But it is very important, in my opinion, that you time it correctly, because if you make 100K of sales proceeds, you will be paying around 22% of capital gains tax in Spain. Excuse me. And potentially, if you had better planning, you will be paying zero. So definitely worth having a look to it before taking any decisions about timing on how to do things. So that's it. I don't have any more questions. Thank you so much for joining today. It was great. It was the first webinar that I use my treadmill. I'm going up. I have an elevation in the treadmill. That's why I am sweating very much. But it was a great experience as well for me, because, at least I didn't fall off the treadmill while talking. So pretty good. Thank you so much for joining today. Send me an email if you need anything. Go to spainguru.es. Have a look to the website. Everything is free in the website. You can use all the information there. And then, of course, if you engage with any of the vetted professionals that I recommend, of course, you will have to pay for those professional services, and I will get a commission, definitely. But as you can see in my reviews that are online, I have almost 300 reviews online. 99.99% of them are 5 stars. The 2 of them that are 4 stars are people who probably missed the keyboard and put 4 instead of 5, really, because they have wonderful comments. So yes, we've been in the industry several years, more than 10, and wonderful reviews out there. So you're in good hands, right? So I'll see you around. Thank you so much for joining again, and I'll send you a recording very, very soon. Have a wonderful week. Bye-bye.
Oh, and one more thing. Apparently YouTube says you're gonna love watching this video right here. I think you should watch it.